that, let's also kickstart the show and start taking your stock related queries. But before we do that, viewers, the number that you can write to us is flashing in fact on your screens and on the top of your screens as well. Do write to us with your buy price for the stocks that you're already invested in and for the stocks that you're hoping to invest in. Do mention the time horizon that you then have in mind. In fact, let's kickstart taking all of your stock related queries. Then we have G. Chokalingam, who's the founder and CIO at Economics Research and Advisory, joining us. Let's kickstart the show by taking the first query that we're getting this morning. Then, firstly, good morning, Mr. G. Chokalingam, and a very happy new year. The first one that we're getting, in fact, is coming in from Ahuja, who's writing to us from Ambernath, wants to know about the 100 shares of Imami that he's holding on to at a buy price of 800 rupees, currently sitting at a loss of just about 27% at this point. Do you think he should book the loss and move to NTPC Green instead?
Sorry, which stock you mentioned?
So the stock that I'm talking about is Imami, because we do have Ahuja who's writing to us 100 shares at a buy price of 800 rupees. Do you think he should book losses at this point, because he's currently sitting at a 27% loss? Should he book losses and move to NTPC Green instead?
Yeah, sure. Before that, wish you happy new year. And just a clarification, we hold a research analyst license. So this is a research view, not a chief investment officer. Coming to Imami, great company, no doubt, but the problem is that the FMCG sector is likely to suffer from single-digit volume growth syndrome even in Q1. But within that sector, I prefer ITC Limited. Today is date for demerging the business and for the hotel business. I believe ITC would outperform most of these FMCG stocks because of very strong cigarette business, as well as the allotment of hotel stock, which can create a good return for the ITC shareholders.
That view coming in, Mr. Chokalingam. Next query is coming in from Arvind, who's writing to us from Kerala. He's planning to allocate some part of his portfolio to either Adani Ports or JSW Infrastructure. He's asking which out of these two companies would be a better pick, considering future growth, fundamentals, as well as a good entry point. What's your view?
Yeah, Adani Port, on any small correction also, one can hold buy for long term. But JSW Infra can be purchased even with a short-term investment perspective, and both I would give buy, because the India's external trade, though exports are not growing, imports are growing substantially, which would be positive for both port-based business companies.
That's a take coming in as far as JSW Infra then is concerned. In fact, the next query that we have is coming in from our viewer named Nikhil Sharma, who's also wishing you a very happy new year, Mr. Chokalingam, and he wants to know about Vedanta, because currently holding on to 40 shares, buy price is 515 rupees thereabout, sitting at a loss right now. What do you think he should do though?
I would prefer Hindustan Zinc to Vedanta. I'm not able to understand why this restructuring twice. Earlier it was consolidated, now demerging. The reasons are same in both events. And also considering the balance sheet comfort, Hindustan Zinc looks far superior to Vedanta.
Okay, so that's the outlook on Hindustan Zinc coming in, and let's go across and take our next query coming in. We have our viewer Raman, who's writing to us from Chennai. He's asking for a few stock recommendations to buy for the new year with an outlook of 1 to 2 years. It's a broad-based query. What's looking good to you right now, Mr. Chokalingam?
4 or 5 stocks. One is Nesco. Second is Karnataka Bank. Third, FDC Limited. And fourth, Shalby Limited. Among these, most of the stocks we have personally invested. Karnataka Bank, Nesco, Shalby. And I'm pretty confident that these stocks can create significant wealth in 2025. If not within a year, at least in 1 to 2 years, they can create a solid wealth. That's my firm conviction.
That's a take coming in as far as the pharma pack, the banking pack, in fact, is concerned. But the next one that we, in fact, have is coming in from Bala, who's writing to us from Coimbatore, wants to know about Narayana Hrudayalaya at a price of 1,250 rupees, because he's holding on to 199 shares. Mr. Chokalingam, what do you think about this one then?
Good stock, no doubt, but whether it can create a solid wealth from current level, I have my own doubt, because valuation is stretched. If somebody can take a little risk associated with the small cap, I would recommend look at other hospital stocks.
So that's the view coming in on Narayana Health, or rather look at other hospital stocks. Mr. Chokalingam, next query coming in from our viewer Rohit, who's writing to us. He says he's a long-term investor and wants your view on Jio Financial. What's the outlook, and would it be attractive enough for a long-term bet?
It has corrected in the last 1 month. I think this is a great opportunity to accumulate Jio Financial because the net worth, including the value of Reliance shares, is huge. So on that basis, the price to book value is only 1.6, whereas many NBFCs are trading at even 3 to 7 times. Of course, it is in the form of shares, but I believe in the over next 5 to 8 years, Jio can use the hidden values of Reliance shares to build its own financial net worth and improve the lending. And I firmly believe that this can emerge as a financial conglomerate, cutting across all the verticals of financial services in the next 3 to 5 years. So I would maintain a strong buy on Jio Financial Services.
Recommendation coming in on Jio Financial Services. With that, let's also switch focus then to an exclusive Union Cabinet meet is currently underway, and we're learning from our sources that subsidy on DAP might be hiked. We do have Prakash Priyadarshi on the phone line who's standing by with the latest details. Prakash, what does the quantum of the hike then look like?
Yes, it's the first cabinet meeting of the new year, 2025, and we are expecting there's some big decision that the cabinet may take for agriculture sector. We're given to understand that the cabinet is likely to increase subsidy allocation for DAP. It's a very significant development coming in. We are given to understand that the cabinet is likely to increase subsidy amount by rupees 150 to 200 per bag, primarily in order to offset the prices in the international market. As you are aware, the DAP prices in the international market have increased significantly in the last few months. It has gone beyond rupees $600 per ton. And it is causing companies difficult to maintain the prices at the same MRP. And therefore, they are requesting government to either increase subsidy amount or allow them to increase MRP. So that's the main reason. And the government is also pushing it hard to maintain availability of DAP in the retail market so that it could not cause difficulty for the customer, for the farmers. And therefore, it is expected that the government may increase subsidy amount on DAP in today's meeting. The second one is, of course, with regard to farm sector as well, where extension of PM Fasal Bima Yojana is also on the agenda, and it is likely that the cabinet may extend it. Back to you.
Thank you so much for taking us through all of those exclusive details. Some very important exclusive details rather to look forward to when it comes to the budget announcements. And this one is the cabinet is likely to hike subsidy on DAP. We'll be watching out on any further developments and informing you promptly on the same as and when we get that. But on that note, time to slip into a very short break. Viewers, keep writing to us and we'll address all your stock specific queries just on the other side of this short break.
Welcome back. Thank you so much for staying tuned in. Well, the next query that we have is coming in from our investor named Satish, writing to us from Pune, Nilesh. And he's asking us about Asian Paints because he's holding on to his buy price, in fact, was 3,000 rupees per share. But he's not mentioned how many shares he's holding on to. But what do you make of this counter regardless then?
Sharp decline in this particular counter from past almost 3-4 months now. Looking at the technical structure, it has gone into extremely oversold territory. So there could be a potential pullback that we might see in this particular counter towards the levels of 2,400 to 2,600. But looks difficult to touch 3,000 in the very short term, unless until if somebody has a positional view of more than 1 year, then probably one can hold keeping a trailing stop loss below 2,100. But at present, I think it is advisable to stay put, keeping a stop loss below 2,150. And we expect a dead cat bounce in this particular counter.
You coming in, Nilesh, and welcome to the show. Good to have you. Wishing you a very happy new year and everyone at your team as well. But let's move on then. And Mr. Chokalingam, next query coming specifically from you. We have a big fan of yours who's writing to us, wishing you a happy new year and says, I'm a big fan of Mr. Chokalingam. The stock that he wants to get your view on is a Delta Corp. Quantity 60 is what he's holding, a price of 213. Currently sitting at a loss of 45%, which is quite a significant loss. And his second stock is also Equitas Bank, holds 90 stocks at 89 and a loss of 28% is what he's facing on this one. What should be the strategy on both of these names, Delta Corp as well as Equitas Bank? Do you think he should book his losses and exit, or are you expecting some recovery on the charts for both of these names?
Thanks for the wish, and I wish all the ET viewers a very great year ahead. Coming back to these two stocks, Delta Corp valuation is slightly stretched, and particularly after GST, imposed, the fundamentals are not improved substantially. However, if you see the stock price movement over the last 5-8 years, the stock, does flare up almost once in 2-3 years. So since there is a huge loss, it is better to wait for such a tactical opportunity. And secondly, this Equitas Bank, I believe that all these small finance banks, microfinance converted banks, all these continue to have a lot of stress. Particularly, the credit growth has slowed down substantially right now as compared to last financial year. I prefer Karnataka Bank to Equitas Bank because Kannada Bank is trading at around 25% discount to adjusted book value. It continues to grow its credit in double digit. And over the years, it has reduced net NPA substantially. And personally, also, we have invested. And I may be wrong, but I have extraordinary confidence in Karnataka Bank for medium to long term.
Quite bullish on Karnataka Bank, and that's the take coming in from Mr. Chokalingam. So time to write that one down then. But the next one that we in fact have is coming in from Padmaseva Rao, writing to us from Bengaluru, Nilesh, and he wants to know about KPIT Technologies. 6 shares, buy price is 350 rupees. What do you make of this one?
KPIT Tech, it is currently trading somewhere around 1500 rupees. I think is holding since a long time. The stock is, the major structure is looking positive. Currently, we are witnessing some amount of consolidation, but it's a good stock to be into and good portfolio stock as well from a positional point of view. It has a very strong support near about 1300 and the positional target comes somewhere around 1700 to 1800. So I would advise to stay put, keeping a trailing stop loss near about 1400, and we might see a pullback towards 1550. That's the 200-day exponential moving average. A breakout above the same will open upside towards 1700 to 1800.
Technical take coming in on KPIT Tech. Mr. Chokalingam, once again specific query coming from you. This time it's from our viewer Aziz from Karnataka, asking for your view on Tata Steel. Now this stock has seen quite some correction over the last 1 year, 6 months or so. Tell us what the outlook is now. Would now be a good time to make a fresh entry?
I have a negative view on steel industry because we have seen April to October, November period of current fiscal. The exports have come down, imports have gone up. There is a pressure on the price realization. Even the core sector growth has moderated compared to what it was last year. All these developments are negative for steel industry, including Tata Steel. So I would favor certain businesses or sector which have a great potential. So I believe once ITC hotel stock is listed, there will be a lot of activities in the hotel business in terms of consolidation. So ITC is the best stock for conservative investor in the large cap space. Otherwise, with a little risk, one can look at Park Hotels, Surendra Park Hotels. That is now close to its IPO price and one of the cheapest hotel stocks in the small cap segment. So one can consider either of these two depending upon the respective risk profile.
Absolutely. So that's the take coming in. Those are the two counters to keep an eye on. But Nilesh, I'm going to come right back to you because we do have Jay Krishnan writing to us from Kerala, wants to know about Rail Vikas Nigam. In fact, he's holding on to, he's not mentioned how many shares, but 507 is his buy price. What do you make of this counter then?
Terminal is currently trading somewhere around 430 rupees, and it is trading exactly tad below its 200-day moving average, which is placed at 433. So overall, there are multiple hurdles for this particular stock. From a short-term point of view, we expect some consolidation to continue in a very tight range of 400 to somewhere around 460 on the upside. So 400 is acting as a very important support. So ideally, that should be the stop loss for the long position. And a breakout above 450 will open upside towards 480 to 500. So at current level, I would advise to stay put, keeping a trailing stop loss near about 495, and upside may extend towards 450 to 470.
To watch out for on Jail Vikas on that. Hi there, welcome back to Buy Now Sell Now. Let's keep it going with all your stock specific queries. We have Nilesh as well as Mr. Chokulingam joining us back on the show. Mr. Chokulingam, I'll come to you now. This query is coming in from our viewer Tushar from Delhi. He wants to get your view on Blue Star. He wants to add at current levels from a long-term perspective. Now, the entire white goods space has been doing fairly well, and Blue Star also on the quarterly front. It's been a decent set of numbers coming in for quarter two. Tell us what's the outlook for Blue Star, and would it be a good add at current levels?
Definitely, it's a great company. Long term, it always creates a lot of wealth. But at a near 52-week high, I believe that even the long term story is priced in. So, in case stock falls minimum 5 to 10%, then fundamentally it can become attractive.
Baked in the pie, and that's the take coming in as far as Blue Star is concerned. Nilesh, I'm going to come right back to you because the next one that we have is coming in from S. Janardhanan, writing to us from Chennai. Wants to know about LG Equipment, 12 shares, buy price is 700 rupees. So what do you make of this counter then?
So LG Equip, I think the stock is witnessing more sort of a consolidation from past almost 1.5 year now, and it is trading well below its all long-term and short-term moving averages. So it looks like we may see this consolidation to continue. The support for this particular stock is placed 550. So ideally, that should be the stop loss for the long position, and a breakout is awaited, which is placed at 620. A breakout above 620 will confirm the bullish reversal pattern, and then we might see a follow-up move towards 650 to 700. So as of now, watch out for levels, keep a stick stop loss somewhere around 550.
At 550 for LG Equipments. That's the view coming in from Nilesh. Mr. Chokulingam, next viewer query coming in from Rajeshwari, our viewer from Chennai. She's purchased 30 shares of Tata Tech at a price of 1080 rupees per share. She only wants a short term or a maximum of 6 months view because currently she's facing a loss on this counter is what she's saying. Could you please advise her what to do? Exit or average the stocks right now? And if you have any idea on the 6 months target of what the stock is looking like, some recovery on the charts in 6 months, or will it take slightly longer? At least on the fundamentals, if you could tell us.
It's a great company, but valuations are extremely stretched. If one has to pay this kind of PE, the business should show strong profit growth, but profit growth is lagging as compared to the PE multiple it enjoys. So I firmly believe that there is a possibility of Tata Technology going down further. So within IT sector, I would prefer Cyient Limited. That stock also corrected in the last 1 month, and it has started a semiconductor subsidiary. And in terms of relative valuation, Cyient looks more attractive than Tata Technology.
And that's the take coming in as far as Cyient is concerned. In fact, we also have a next query coming in from Prashant, who's writing to us from Mumbai. Nilesh wants to know about Bharat Forge, 215 shares. Buy price was around 901 rupees. What do you make of this one then?
So recently we have seen a sort of a negative formation in this particular stock after hitting highs near about 1800. The stock is trading in a falling channel. Good part is that it has a very good support somewhere around 1260. So first of all, keep a stop loss below 1260. If it falls below those important support zone, then it may slide further towards 1200 or maybe below that. So as of now, 1260 should be the stop loss, and on the upside, the pullback may extend towards 1350, but a breakout level is placed at 1350 zone. A breakout above 1350 will open upside towards 1500 plus. So I would advise to stay put from a little positional point of view. Immediate trend looks slightly on a negative side, but positionally the major structure looks positive.
Major structure looking positive on the broader basis. That's the view on Bharat Forge coming in. But Nilesh, coming back to you once again, because we have another technical specific query coming in from a viewer, Venkat from Chennai. The stock, he wants a tech check on his JM Financials. He's asking if it's a good time to buy this stock purely based on technicals. What's the chart looking like for JM Financials?
I would wait for a confirmation of this particular reversal that we have seen in past 2-3 sessions now. So a breakout about 135 will provide first level of confirmation. Then probably we'll see a follow-up move towards 150 to 155. So at current level, if somebody is buying, then a stick stop loss should be placed somewhere of 122. So either wait for some dip towards 125 and then probably a counter bet can be taken, keeping a stop loss below 121, because that's the double bottom support for this particular counter. That's a short term view, but positionally this particular counter looks good to accumulate on decline. One can buy in a staggered manner and watch out for important levels that we have just mentioned.
Right, then it's time for a very quick breather on the show. When we come back, we'll continue taking more of your stock related queries, so don't go anywhere. Back. Thank you so much for staying tuned in. Let's continue taking more of your stock related queries, and the next one that we in fact have is coming in from our investor named Shiva, who's writing to us from Hyderabad, Mr. Chukulingam. He's a big fan of yours, another one of your fans writing to us, and he wants to know about ONGC holding on to 171 shares at a buy price of 286 rupees, currently sitting at a loss of just about 16%. What do you think about this one then?
I sincerely thank him for his appreciation, and I'm not, actively impressed by oil and gas company stocks. In 2024 calendar year, global crude oil price is down nearly 3.5%, despite wars in two regions of the world. In 2025, as the world is moving towards a lower interest regime, I am pretty confident, the oil price will crack further in a big way, and that could be possibly negative for a stock like ONGC. So I would recommend some other sectors to look for something like ITC or HDFC Bank, where double-digit business growth or credit growth is almost certain after one or two quarters, and the stock also available at an attractive valuation. So one can consider banking business or hotel business rather than oil and gas business at this juncture.
I hope that answers your question. So not only stay away from ONGC, but the entire oil and gas pack is what Mr. Chukalingam is recommending, and instead ITC and HDFC Bank is what he's liking. But moving on, Nilesh, two stocks coming in. That's our query coming in from our viewer Radha Krishna from Bangalore, and she's asking, she's holding 50 shares of both Cochin Shipyard as well as Garden Reach Shipbuilders, currently at a loss of 10% in both of these counters. Should she go ahead, book losses in both of them, or still hold and continue to hold and hope for a recovery on both of these stocks when it comes to the charts?
Recently, there's no doubt about the correction that we have seen in this entire pack. So this particular space has been under pressure since almost like 4 months now, and we expect this consolidation to continue. I don't see any V-shaped recovery as of now. But yes, a gradual up move is something that we might see. So from a positional point of view, these are good bets to accumulate and be into. And as of now, if we talk about levels for GRSC, 1400 and 1450, that's the important support zone. And a breakout above 1800 will provide confirmation of a short-term bottom in this particular stock. From a 6 to 8 months perspective, I think this particular stock one can be into keeping a trailing stop loss somewhere around 1450, and upside may extend towards 2000 to 2200. Apart from that, Cochin Shipyard, this particular stock has also witnessed a similar kind of a gradual decline. And as of now, since we have seen a decent correction, it has reached to its multi-month lowest level, and support for this particular counter is placed at 1300. So still some more room left on the lower side. So if somebody has bought it from a trading point of view, then I would advise to keep a strict stop loss now at 1455, and on the upside the resistance is placed at 1700 to 1800.
Then the next query and the last query for the day, in fact, that we have, Mr. Chokalingam, is coming in from Manjula, who's a senior citizen looking to enter. When it comes to Tata Power, what do you think you have in mind for this counter then?
Great company, but they took the initiative in new energy, green energy and renewable. But what has happened is subsequently, a lot of players have entered this renewable energy segment. So competitive intensity is going to increase substantially. Yes, one can consider it willing to wait for 3 to 5 years, Tata Power. Otherwise, if there is 6 months to 1 year view, so one can look at other stocks like Coal India or ITC or HDFC Bank. In Coal India, you will get almost 5% dividend yield as well. So that would be very safe conservative stock.
Okay, Mr. Chokalingam, thanks for that view coming in. But on that note, viewers, that was the last query that we could manage to address on this edition of Buy Now, Sell Now. Nilesh and Mr. Chokalingam, thank you so much for joining us, and we hope to reconnect with you soon. Viewers,